We have all of your Tesla stock news and analysis that you need to know over this weekend heading into this new week, and we're going to start with some news that is coming out today. Walter Isaacson has released another new article, how Elon Musk set Tesla on a new course for self-driving. Quote, FSD 12 was based on a radical new concept that Elon believes will not only totally transform autonomous vehicles, but also be a quantum leap towards artificial general intelligence that can operate in physical real-world situations instead of being based on hundreds of thousands of lines of code, like all previous versions of self-driving software. This new system had taught itself how to drive by processing billions of frames of video of how humans do it. Just like the new large language model, chatbots train themselves to generate answers by processing billions of words of human text. I think it's important to point out that when you're training full self-driving on neural nets, it's basically training like the best human driver there is that really doesn't make mistakes. If you're training on lines of code and writing code for your autonomous vehicles, think a Cruise or a Waymo, well, there's no good code for not to drive into wet concrete or to make the best judgment call when there's a fire truck on the side of the road, right? There's very few lines of code that can account for real world situations that you might come across. So in theory, unless every single other vehicle out on the road was using the same line of code as you are, it's not going to be safer than having a neural net network that is operating full self-driving. Amazingly, Musk had set Tesla on this fundamentally new approach just 8 months earlier. Musk, who liked to manage by decreeing what metrics should be paramount, gave them their lodestar, the number of miles that cars with full self-driving were able to travel without a human intervening. I want the latest data on miles per intervention to be the starting slide at each of our meetings, he decreed. He told them to make it like a video game where they could see their score every day. Video games without a score are boring, so it would be motivating to watch each day as the miles per intervention increases. Members of the team installed massive 85-inch television monitors in their workplace that displayed in real time how many miles the FSD cars were driving on average without interventions. They put a gong near their desks, and whenever they successfully solved a problem causing an intervention, they got to bang the gong. By mid-April 2023, it was time for Musk to try the new neural network planner. He sat in the driver's seat next to Eshkak Alaswamy, Tesla's director of Autopilot software. 3 members of the Autopilot team got in the back. As they prepared to leave the parking lot at Tesla's Palo Alto office complex, Musk selected a location on the map for the car to go and took his hands off the wheel. I would like to reiterate, Elon Musk looks all in on autonomy, on full self-driving, and that is why we invest in Tesla. That's ultimately the big golden nugget that's going to change your life and going to change Tesla is the robotaxi network. It's autonomous vehicles. It's robotics at that point. If you can solve FSD, then that makes it a lot easier to solve other AI issues, like creating a robot. So all of this, basically every single day, we're hearing new iterations from Walter Isaacson's new book about how Elon is so focused on autonomous vehicles and just evolving the human race. It makes me more quantifiably bullish now than I was before, and I was already very bullish before. So you can only imagine what my portfolio looks like. Yeah, it's getting pretty heavy on Tesla. Tesla's stock has been falling recently and really disregarding any of this good news that we have talked about basically in every video. And that's a lot in part to do with seasonality for the markets for the month of September, as well as the major economic data that we're going to get next week. And the biggest data point of all is CPI. Now, CPI comes out on September 13th. That is on Wednesday. You are expecting, and the estimates just went higher, 0.6% annualized inflation on a month-over-month basis. So that would be over 6% annualized. That would be a big problem for your headline reading. As you can see right here, the estimate is 0.6. Last month's month-over-month reading was 0.2%. Markets really care about that month-over-month reading. Your core inflation rate year over year, you're expecting good news. That's expected to fall from 4.7% down to 4.3%. Your inflation rate year over year on a headline basis is expected to increase from 3.2% to 3.6%. We know a lot of this has to do with kind of the base effects from last year. So your month-over-month readings are the most important. Once those base effects wear off again, which will be towards the end of this year, then that should actually start to benefit your year-over-year numbers. But until that happens, it looks like your year-over-year could continue to look a little bit higher, at least on your headline inflation numbers. Your month-over-month core inflation is expected at 0.2%. That's great. That's perfect. As long as that doesn't rise, we should be okay. But your headline month over month at 0.6%, I think could set the markets up for a little bit of fear heading into September 13th. So that would be Monday and Tuesday. And if we pull up one of my favorite charts right now, this is looking at the S&P 500 from 1950 through 2021. And it's very clear the end of September tends to be pretty negative. But take a look at September 13th right here when you get your CPI report. You tend to dip before, right, in the really second week of September. You tend to get a dip in the beginning of the week. That's kind of what happened last week. The last couple of days have been kind of red for the markets, especially big tech stocks. And then you tend to actually rally during this period of the 12th/13th through about the 17th of September. Historically speaking, you tend to increase during this time. And that's after the CPI report, which is going to come out next Wednesday on September 13th. And then the end of the month tends to be where a lot of the selling actually occurs. So when I look at the estimates here, they're very high for your headline month-over-month number. Markets could have some fear Monday and Tuesday, but I don't think we're going to come in at 0.6% for your headline month-over-month. So if you come in at 0.4%, 0.3%, 0.2% somehow, that would be stellar news for our markets. I do think the biggest thing you guys need to be watching as investors in Tesla or even the broader markets is the consumer. You need to be watching any kind of consumer data that we're going to get. And why is that? Well, if you look at the Atlanta Fed GDP Now tracker, this tracker of GDP is at 5.6%. This moves up or down mostly based off of retail spending numbers. That is what really dictates the Atlanta Fed GDP, at least the tracker. And that's what moves a lot of your economist estimates. So the next GDP report is not until October 26th. And I think with these estimates where they are now, if we go into October 26th with these same estimates, markets could crash after that. Because I highly doubt GDP is not going to come in 3.5% on the high end or 2.4% on the average estimate. It's probably going to come in 1% or possibly even less, based on kind of what I'm seeing in the economy, right? People are not spending money the same way they were. Retail earnings are not good. We just heard from the Fed Beige Book 2 days ago that you're seeing real weakness in consumer spending on manufactured goods as well as consumer goods. That did not affect this prediction of Q3 GDP. So I think you're set up for failure at this point, let's be honest. We're not going to come in at 5.6% Q3 GDP. We're not going to come in at 2.5% Q3 GDP. It's not going to happen. But with that being said, October 26th is still almost 2 months away. So any consumer data that we get from here could change the estimates, could make the estimates start to fall. And that could cause some market downside even before October 26th. So what do we have as far as data for this week that pertains to the consumer? We don't really have anything on Monday. On Tuesday, you're going to get the unemployment rate for the UK average hourly earnings employment change. That could move our markets just because we tend to kind of be in line with Europe as well as Canada. And then on Wednesday, you have the UK's GDP month over month. Again, for the same reasons, that could move our markets. But we really want to see American data, or even your Canadian data could be a little bit more important to us. Now, on Thursday, you're going to get the ECB interest rate decision. You're going to get wholesale sales for Canada. That data comes out at 8:30 in the morning. But on Thursday, you're going to get retail sales for the U.S. month over month. And you're only expecting 0.2%. Last month's reading was 0.7%. So 0.2% is a sharp decline. If you get a negative number here, that's going to affect everyone's forecast for Q3 GDP, and that could be a problem for our markets. If retail sales were to miss, let's call it negative 1 or 2%, I mean, people are going to really start to have recession questions being talked about out there in the markets. That's the big thing you need to be watching for. In my opinion, after CPI, retail sales is going to be big. It will move the estimates for Q3 GDP, which I think right now is set up for failure. On Friday, you're then going to get Michigan consumer sentiment, and that comes out at 10 o'clock in the morning. This does tend to move the markets quite a bit. You're going to get Michigan current conditions, Michigan 5-year inflation expectations, consumer expectations, inflation expectations, and again, consumer sentiment. So these things can give you a pretty good gauge on how the consumer is feeling, and that can give you a glimpse into kind of more relevant data. A lot of this data that we get is delayed a month, 2 or 3 months in some cases, like the GDP is 3 months delayed. You could be going into recession now, but you won't even know for 3 months. So any kind of forward-looking data will be important to our markets, and it will move Tesla. It will move the stocks that you are invested in, and that's why this is such a big deal. And this upcoming week is going to be a big one. The economic data is going to be important, but also you have quad witching on September 15th. So what tends to actually start this end of the month sell-off in September is quad witching. Quad witching is where you have stock index futures expiring, stock index options expiring, and option futures expiring, or index options expiring, that fourth one always gets me. 4 different derivative classes, nonetheless, just expiring on the same day. That happens 4 times a year. And you don't tend to get a sell-off heading into quad witching, but you tend to get a sell-off after quad witching in the month of September. That's why when you look at the last 71 years, it tends to give you the same outcome, a sell-off at the end of September, right? It tends to be pretty unanimous and starts to kind of accelerate towards the end of September almost every time you have a bad September. So I do expect this week could break Tesla stock out of this close range that it's been at. You've really been bouncing in between $240 on the lower end, and that is the support level. And you've been testing resistance at this 50-day moving average almost every day for the past 10 days or so, since August 29th, and that is at $256.33. I think this data will certainly break us out of this range, and I'm not very optimistic for this week, so it could be a move lower, but we've seen crazier things happen. This could spark a massive rally for the markets as well. That's why it pays to stay up to date with this information. As far as other Tesla stock news, in the past 5 years, EVs have gone from 2% of new car sales in California to 22%. Tesla has now overtook Toyota as far as sales in California, breaching that 15% market share level. And you can see Toyota has really been declining in California for over the past 2.5 years now. It's been pretty consistent downward trend on this green line, and this black line has been trending higher. Honda more recently has started to trend up a little bit, but nobody is doing nearly as well as Tesla. Tesla really is the only one that is increasing. Honda a little bit, like I said, but they're still far below their total market share than they were back in 2017 or 2018. Tesla is just taking over. And with that being said, the sales numbers for the luxury EV segment, well, there's no comparison. The Model Y, year to date in 2023, has sold 190,500 in this luxury D segment. Your next highest competitor, if you will, is the Cadillac Lyriq, which has sold 2,316 units. Literally at a 1% market share in Q2 of 2023. And this is for Q2 2023. You are at 105,500 units. And the Cadillac Lyriq is at 1,348. Teslarati and other news outlets are starting to pick up on the fact that the next generation EV platform, which is that $25,000 Tesla, as well as the Tesla that is expected to be robotaxi, right? Level 5 autonomy, no gas pedals, no steering wheel, no mirrors, nothing of that nature. Well, it's expected to be built now in Texas and not in Giga Mexico. This brings up real questions on what do they plan to do in Giga Mexico? Is this just another gigafactory to kind of boost production? A lot of people thought Tesla was going to scramble to build Giga Mexico for this next generation EV. If that's not the case, we need to be looking out for more expansion plans at Giga Texas, and ones that have a similar timeline to what we expected for Giga Mexico. At one point, we were expecting Giga Mexico to go online by the end of 2024. Now we want to see what's going on with the Giga Texas, and what does that expansion time frame look like. According to Benchmark Minerals, weighted average lithium ion cell price has fallen to $98 per kilowatt hour for the first time in 2 years due to falling raw material prices. And this should help Tesla's margins obviously improve. If Tesla's margins improve, then they can cut the price of a Tesla vehicle and still maintain their same margins. And that's what Wall Street has been freaking out about basically the last year or so. Tesla has also increased the APR percentage for financing in the US for excellent credit rating. An 84-month loan is now at 7.32% from a previous 6.91%, and a 72-month loan is now at 6.34% from a previous 6.19%. Tesla's stock on Friday was down 1.19% in regular trading, up 0.19% in after hours, so net down 1% on the dot on Friday. The option activity for Tesla really tells a different story. You had a positive order value of 70%. You had 1,096 orders totaling $628.58 million. A very high dollar amount heading into Tesla options, very much skewed towards the bullish side and bullish positioning, which is quite interesting given the stock fell 1% on Friday. 2-year Treasury yields on Friday increased 3.5 basis points, and 10-year Treasury yields were flat on the day. So when I think about Tesla logically, specifically Tesla stock over the next coming weeks, I do think to some degree expectations are way too high that the economy is doing just fine, that we're heading into the soft landing. If you go into the real economy, people are not spending money the same way they were. If you listen to retail earnings calls, yeah, sure, they talk about theft, they talk about other things, but they're very clearly stating consumers, they're only buying the necessities, or the vast majority of consumers are only buying the necessities. If you look at just inflation and certain products over the past couple of years, it's astonishing. Look at some of these items on Walmart. On August 24th, 2020, this great value thin slice mesquite smoked turkey breast family pack 16 ounces was $3.14. It is now $6.72. That's 114% of an increase. All natural, 80% lean, 20% fat ground. $3.46. Today, $5.47. Increase of 58%. Tostino's original crisp crust pepperoni, $4.88. Today it's $7.64. I mean, these kind of increases to the price of just living, well, leads to recessions. Always will. You did not get a 60% pay raise in the last 3 years. 100% pay raise? No, that did not happen. So I think the expectations are way too high for a soft landing and for everything to be okay. Now, if estimates for GDP were more in line with maybe 1%, or half of 1%, I wouldn't be so negative heading into some of this retail sales data, heading into some of this consumer-related data that we're going to get in September, and specifically this upcoming week. So I really think you're set up for failure here. This does not have to be the epic crash. I think you really want to be hedged out in your portfolio once we do get that Q3 GDP report coming on October 26th. But even if we get bad data from now until then, the estimates will change for GDP, and the estimates changing can cause the markets to fall. So I'm not very optimistic about Tesla stock in this upcoming week or the next couple of weeks. I think danger could be right around the corner. If you guys would like to come hedge out your portfolios, come be protected against any downside in the markets, click that link down below in the description of this video. I send out alerts every time I make trades. You can come join the community and join the conversation over there. Overall, if you're a long-term investor, this is welcomed. You want to see Tesla stock fall as low as possible because, I mean, that's just a better risk reward. You're going to make more money the cheaper you can buy Tesla stock, and that's exactly what I'm planning on doing. So I welcome any decline in Tesla stock. And if you're hedged, then you're protected either way. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know what you think about all of this information down below. You guys enjoy the rest of your day and your weekends, and I will see you in the next one.